Hello, everyone. Do you want to unlock the secrets of how information shapes our world and makes some people rich while others struggle? Imagine having a superpower that lets you see hidden advantages and disadvantages in every deal, every job, every decision. That superpower is understanding asymmetric information. Today, we'll dive deep into it. This knowledge isn't just for economists, it's for anyone who wants to make smarter choices. Get ready for some mind-blowing insights that will change how you see the world. Let's get started and feel that dopamine kick. As we uncover these fascinating concepts, you'll gain a real advantage just by understanding these ideas. Now, let's talk about asymmetric information. In economics, this happens when one party in a transaction has more or better information than the other. Think of it like this: one person knows a lot, the other knows less. This difference creates big problems, making markets less efficient. There are two main problems from asymmetric information: adverse selection and moral hazard. We'll explore each in detail. First, let's look at adverse selection. This term means bad choice or unfavorable selection. Adverse selection occurs before a transaction takes place. It happens when one party knows more about a characteristic of the good or service being exchanged, and this hidden information influences the outcome. The party with less information is at a disadvantage, potentially making a bad choice. Let me give you a very common example. Think about the used car market. When you buy a used car, the seller knows much more about its true condition than you do. The seller knows about hidden problems, past accidents, or upcoming expensive repairs. As a buyer, you can only see what's visible. You might not know about these hidden issues. Because of this, buyers often fear buying a lemon, a car that looks good but has many hidden defects. This fear leads to a problem. Buyers, unable to tell a good used car from a bad one, are only willing to pay an average price. They won't pay a high price, fearing a lemon. So owners of really good used cars, knowing their cars are worth more, are not willing to sell at this average price. They keep their good cars. This leaves mostly lemons or cars with problems on the market. The average quality of used cars for sale goes down, making buyers even more suspicious. This is adverse selection: bad cars drive out good cars due to hidden information before the sale. Let's consider health insurance. People who are very healthy know they are healthy. Those often sick know they are sick. Insurance companies don't know this perfectly. If an insurance company offers a standard plan at a price based on average health, what happens? Healthy people might find the price too high, as they don't expect to use much health care, so they might not buy it. People who know they are sick will definitely buy it, expecting to need much medical care. This means the pool of insured people will mostly be high-risk individuals. The insurance company faces higher costs than expected. To cover these costs, they raise premiums, making it even less attractive for healthy people to buy insurance. This is a classic adverse selection problem. The insurance company attracts the worst risks because of hidden information about health status before enrollment. To summarize adverse selection, it's about hidden information existing before a deal. One party has information the other doesn't, leading to a biased or adverse selection of goods or people in the market. The party with less information makes a choice that might not be optimal for them. Now let's move to moral hazard. This is different from adverse selection. Moral hazard occurs after a transaction. It happens when one party changes their behavior after an agreement, because they are protected from the full consequences of their actions. Once a deal is made, incentives change, and one party might take more risks or act less carefully, because someone else bears part of the cost. Let's use the health insurance example again, but for moral hazard. Once you have health insurance, you might be more likely to visit the doctor for minor issues, or be less careful about your health, knowing the insurance company will pay. Before insurance, you might have thought twice about going to the doctor for a small cold due to full payment. With insurance, your cost for each visit is much lower, e.g., a copay, so you might go more often. This change in behavior is moral hazard. Another example is car insurance. Without insurance, you'd drive very carefully to avoid huge repair costs. With full coverage car insurance, you might become a little less cautious. You might park in riskier places or drive a bit faster, knowing the insurance company will cover much of the damage. Your incentive to be extremely careful might decrease. The insurance protects you from full financial consequences, leading to changed behavior after buying it. Consider an employee. If their salary isn't directly tied to effort or company performance, they might exert less effort. For example, if a manager gets a fixed salary regardless of team performance, they might be less motivated to push for extra effort. This is moral hazard. The employee agent reduces effort because the employer principal can't perfectly monitor it, and the employee is protected from full consequences. To summarize moral hazard, it's about hidden actions or changing behavior after a deal. One party, protected from risk, acts in a way less beneficial to the other or takes on more risk. So, what's the key difference? Adverse selection is about hidden characteristics before an agreement. Moral hazard is about hidden actions or changed behavior after an agreement. Both stem from asymmetric information, but they happen at different stages. How are these problems solved? For adverse selection, solutions involve revealing more information or creating incentives for people to reveal true characteristics. In the used car market, sellers offer warranties or service records to signal good quality. Buyers pay for inspections. In insurance, companies offer different plans with varied deductibles and premiums, allowing individuals to signal their risk. Healthier people might choose high-deductible, low-premium plans. Sicker people might choose low-deductible, high-premium plans. This is screening or signaling. For moral hazard, solutions focus on monitoring behavior or aligning interests. Insurance companies offer no claims, bonuses for careful drivers or install tracking devices. Employers offer performance-based bonuses, stock options, or closer supervision to encourage effort. These mechanisms reduce incentives for the insured or employee to take excessive risks or shirk responsibilities. In conclusion, understanding asymmetric information with adverse selection and moral hazard is crucial for navigating markets and daily life. Adverse selection occurs before a deal due to hidden characteristics, leading to an unfavorable selection. Moral hazard occurs after a deal due to hidden actions or changed behavior, as one party is shielded from consequences. Recognizing these concepts helps us understand why markets don't work perfectly and why institutions design contracts as they do. Being aware of these economic forces, you can make more informed decisions. Protect yourself from pitfalls and find opportunities. You now have a powerful tool to analyze many real-world situations. Thank you for joining me on this journey of economic discovery. Important English vocabulary and their Korean explanations. Unlock 잠금을 해제하다 비밀을 밝히다. Secrets 비밀. Shapes 형성하다. 모양을 만들다. Struggle 고군분투하다. 어려움을 겪다. Superpower 초능력. Hidden 숨겨진. Advantages 장점 이점. Disadvantages 단점 불리한 점. Deal 거래 협상. Decisions 결정. Asymmetric information 비대칭 정보. Dive deep 깊이 파고들다 심층적으로 탐구하다. Insights 통찰력. 도파민의 킥 도파민 분출 기분 좋은 자극. Edge 우위 유리한 위치. Transaction 거래. 파티 당사자 관계자. Efficient 효율적인. Adverse selection 역선택 정보 비대칭으로 인해 바람직하지 않은 결과가 발생하는 현상. Moral hazard 도덕적 해이 거래 후 행동이 변화하여 타인에게 손해를 끼칠 수 있는 현상. Before 전에, after hue. Characteristic 특성, influences 영향을 미치다. Outcome 결과, disadvantage 불리함. Used car 중고차, condition 상태. Hidden problems 숨겨진 문제들. Defects 결함. Worry 걱정하다. 레몬 소거로 불량품, 하자가 있는 물건. Average price 평균 가격. Excellent condition 최상의 상태. Suspicious 의심하는 의심스러운. Drives out 율몰아내다. Health insurance, 건강보험, population 인구, premiums 보험료, high risk 고위험, enrollment 등록, 가입, protected 보호받는, consequences 결과, 영향, incentives 유인책 동기, 코페이 보험 본인 부담금, cautious 신중한 조심스러운, full coverage 보험 종합보험, employee 직원, employer 고용주, principal 경제학에서 주인 본인 예 고용주, agent 경제학에서 대리인 예 직원, 모니터를 감시하다, 모니터링하다. Deductibles 보험 공제, 스크리닝 선별, 검사, signaling 신호 보내기, 신호화, align 일치시키다, 정렬하다. No claims bonuses 무사고 할인 보험에서 tracking devices 추적 장치, performance based 성과 기반의 supervision 감독, 실 코피하다, 게으름 피하다. responsibilities 책임, manifest 나타나다 드러나다, crucial 매우 중요한, navigating 헤쳐나가다, complexities 복잡성, biased 편향된, optimal 최적의, pitfalls 함정 위험, opportunities 기회.